Hey guys, it's Sunday, so it's between market days, and I did not take this trade, but I want to show this to you because I really feel like it's worth taking a step back sometimes as a day trader. We tend to get caught up in the minutiae, and we didn't get caught up in terms of finding trades by looking at very fast charts like tick charts, 5 second charts, and I'm guilty of this too. But it really, what I've really found is that it really does pay to constantly be taking a couple of steps back and looking at slower time frames like 15-minute charts to get a sense of where the market is really is going, where it's been, and where the a little bit more lucrative opportunities might be hiding in the chart. So I say this a lot to the people that I work with directly one on one, is that I really like shorting a lot more than I do like going long. It's simply because shorting price drops a lot faster, and so you get away from your entry much more quickly into safe territory, and it just tends to be a lot easier. Price tends to run down with fewer pullbacks, which just makes it a lot easier to reduce risk. However, there's always a time for the other side, though. And on the long side, well, let me just say one more thing about the short side. On the short side, I tend to enjoy um, selling, little rallies up to my uh, what I call my blue and gold lines. My blue line is a 1 minute 8.5, and my gold line is the 1 minute 20. And a lot of trades come off the blue line for sure on the way down. It's the fastest line, so price will pull back to it when it's in a faster downtrend. Which again, I really like the fast downtrends because they just make things a lot easier. Frankly speaking, they just make things a lot safer. They reduce the risk, etc. So when you are selling much stronger rallies, say up to the signal cloud or the anchor cloud, then you really have to be a lot more careful because you're going to have double tops, triple tops. You're going to have price. You're going to have buyers kind of like saying, "Well, hey, we're way up here. I think we might be going higher." So as a seller, you are competing against the psychology of the fact that it's already broken through, okay, some of your faster EMAs, and so there's more buyers to contend with in order to take it down. Now it could still be taken down. Don't get me wrong, and you're coming down from a higher place, so that gives you more room to come down. But yeah, there's who's in the market now is more of a mix. So if you're just selling down something really that's falling rapidly and sharply down, try to give you an example here. Put this blue line back on for a second. Um, when you're selling, let's say price has begun to really uh, high velocity, movement down, right? So mostly what you're going to be finding is that buyers aren't really interested in buying at the first touch of a blue line because you're still way under your fastest moving average. So they're going to sell that back down, right? And they're going to sell that back down, right? And look, you're going to get some nice moves down, okay? But after you've kind of exhausted those moves down, and then we come to people aren't going to be as interested in selling it there. It's going to be a little bit more of a buy situation, right? And so you have to just take your, make hay while the sun shines, as they say. Take your fast trades off the blue line early, like first to second touch, and then you have other things to contend with. Now, I'm going to show you something that you can do after you've had a big push down, okay? And I've talked about this a lot, but let's keep talking about it. When it comes to buying, I really like to keep track of these 15-minute candles that are red, okay? And I really like to watch to see if we have 4, 5, or 6 of them in a row. The first green candle will give a clue as to the new change in direction, okay? And then we can get a confirmation of that direction by the next candle after that, okay? So the first green candle is kind of like an alert. It's kind of like saying, hey, wake up for a second. It could be something different going on here. Let's take a look at the next candle. Let's analyze the next candle and see if there's a buy that's actually going to be forming here. So the way we do that is we wait for that first green candle. When we see a 15-minute candle that is green after a series of red candles, that's as soon as that thing completes. You should be waiting for that 15 minutes to complete. And the second that completes, you want to put a Fibonacci tool on it, okay? And a Fibonacci tool is nothing but a measurement which takes certain measurements of any particular length from top to bottom, okay? So on the way up to 1, the key levels, generally speaking, are going to be this point 236. I don't use it. This point 382, I do use it, okay? 0.5, very, very important, okay? 0.6218, I like this one too. 0.786, yeah, not so important. I'm not really worrying about it. And then 1.0. Okay, so the main ones we're using are 0 and 1, and then these three here, 0.382, 0.5, and 0.618. Now, these three levels here form the heart of what I call the pivot zone. This is where price retraces into this zone that's created by these three levels here. And it typically, if it's going to bounce back up again, this is where it'll do it from. This is zone, okay? So to find this on any chart, on any length, all you do is you take your Fibonacci tool and make sure those three checked first off, and only those three. And then we're going to take our Fib tool and we're going to put, once that green candle finishes, we say, hey, lots of red, now we have a green. So let's look at the top of that green the moment it finishes. We're going to measure from there, but we're going to do it starting within the next panel. Now, Tom is one of my students, and he needs to do it on this one. Otherwise, it won't show up properly on his fast chart. But I need to do it here, okay? So I think Tom's using NinjaTrader. So if you're using NinjaTrader, you would actually start here. And I'll do that for you here, and then I'll just move it over. So from top to bottom, okay? There you go, and then I'm just going to move it over if I can. Oh, wants to start a new one. Sorry. All right, I'm just going to move it over so you can see it clearly, okay? Now what that has done is that has created for us a pivot zone, okay? Price is going to come down into the zone. It's going to do certain things within the zone, and I'll talk about those, and then it's going to come back out, okay? Hopefully, that's the plan. Now, if it does what it's supposed to do when it's in the zone, then we can buy it, okay? So what are those things that it needs to do once it gets into the zone? Real briefly, just make it real simple here. What we need to see when we get down into that zone is we need to see two things. On MACD, we need to see a fast cross. Okay, and you have to wait for that. We need to see a fast cross, meaning your fast line which is below your slower line, needs to then become above. Pretty simple, right? You got to wait for that to happen, otherwise you're going to be too early. Okay, that's number one. Number two is I need to see flat bottom candles. Okay, at least one, if not two or three. Okay. Because typically what you're going to see is they're going to be red coming in. They're going to come in hard and fast too, by the way, just so you know. Because this is the institutions and the bigger players attempting to shake out traders, scare them out. People have already gotten long here when they saw price bouncing and getting up above the moving averages. Here's a moving average cross. People could be saying, hey, I'm buying that cross. That's a very common thing to buy, is a fast cross of the moving averages. I kind of designed these moving averages colors after, kind of inspired, as you can see the same colors here, after MACD, because they do work the same way. They do work to kind of draw attention to themselves and say, hey, we got a fast line now, it's crossing this, so let's, it's going to draw people in, okay? But what these institutions do is they know that the early traders are getting in, and they're going to attempt to shake them out and get their contracts away from them, okay? They're going to try to, this is where money gets made and lost in the market. The eager beaver traders, which are more the retailers, will be buying in this section, okay? The institutions will attempt to shake them out by doing a very hard push down, okay? And if you'll see this all the time with these types of trades. Some people call this the lead candle. If you're just looking at like a 5-minute candle or something, they call it the lead candle because it leads into the buying. So it'll be characterized by higher volume, which you'll see down here, and a sustained push down to the downside into the pivot zone, okay? So you'll see that should be a big clue when you see this big push down, okay? Big clue that something's happening, okay? So anyway, so the first thing you'll do is you'll wait for the cross. Typically the cross comes first. Sometimes it comes at the same time as the expansion candles, but usually it comes first, okay? Because this is measuring internal strength. So it shows you that accumulation's been occurring down here. Down here, this is where a lot of contracts are changing hands, and you can tell that by the wicks on both sides of these 5-second candles. It gets very wicky on both ends, and then you'll see this candle right here was a big expansion candle, and basically that's telling you, okay, the party's over. Selling's done and buying's beginning. Okay, so that's what you see here. You see this expansion. You see these big green candles with flat bottoms. That's your signal to get in, okay? So those are the things you're looking for, all right? I know it's kind of a lot, but not really, because if you see this over and over again, you'll begin to like see that the pattern repeats itself over and over and over and over and over again. But here's where the money gets actually made in the market, okay? We go into a lot about entry, and I probably overemphasize entry, but that's just because we're trying not to get stopped out as we're doing this, right? So the thing is though, where the money really gets made in the market is through your management of your trades. If you've got a great entry, like you'll get a good entry with these types of trades, okay? This is usually, not always, but usually a really good entry, okay? In terms of how far the trade can go in your direction. A lot of entries we look at in trading and in day trading especially, they're more like scalps. You're lucky to get out with your hide intact. Half the time. You're just praying that you don't lose money. Well, we don't really want to be trading that way for the most part. We really want to find the trades that have a lot of potential in them. Okay, and this type of trade really does. Why? Because it's a response to what's already been happening, which is 2 hours of selling or an hour and a half of selling, right? I mean, a lot of people have been getting short here and selling, and people need to cover their shorts, and also there's bargain hunters out there, and it'll sell down to a level that it will be typically you'll see this as not the first time it's come down to this level. This is kind of, in a way, kind of a W in a sense, but that not only was there a lot of selling on this day, the day that this bounce happened, which was Friday, but there's just been a lot of selling in general. Like if you look at Thursday, that was a whole lot of selling, and so this has been a consolidation period with the overnight, and then more selling in the morning, right? So there's a lot of shorts that need to cover eventually. So that's also going to push the price up, and you have to kind of be aware of what's been happening yesterday, the day before, kind of get a feel for what the overall tone has been. So anyway, let's say that I'm going to put this on replay, and I'm just going to take you through this real quick. Let's go ahead and kind of like imagine, okay, that we have just noticed this first green candle, and we put our Fibonacci tool on, so we can see where the 50% level is, and just a little bit of space below and above that, and we see prices dropping down. I'm going to do this kind of relatively quickly here. Actually, let me slow this down just for the actual entry to the actual speed that you'd be seeing this, or close to it. Okay, we can analyze it tick by tick here. Okay, so you can see that, you know, we've entered the panel, and that our MACD, which is the first thing we're always looking at, is still pointing down. We haven't really got much of a curl yet, but it's coming, you know. It's definitely coming. This is faster than it would be on a 5-second chart, but that's just in the interest of time, okay? But as you can see, I've written down here, wait for the cross. So the first thing we're looking for is the MACD cross blue above orange, okay, fast above slow. And now you can see it's sort of flattening out a little bit down here at the bottom, and curling. You can actually, this is what you're looking, I'm going to stop for a second. This is what you're actually looking for, okay? You can see that if you expand a little bit, you can see that the angle has changed. Okay, it's actually pointing up. If you really look at that carefully and zoom in, you can see it's hooking right there, okay? So that's telling you that, okay, it's going to be crossing momentarily. So I'm going to start this replay back up again. Okay, it's going to be crossing momentarily. Now you can see the wicks have stopped being red. You got a little bit of green, but you still have wicks on both sides. So we're not interested in candles with wicks on both sides, but we know that that's a precursor to what's to come. Now this is pinching a little bit more. Okay, now we've got a touch. Okay, that's convergence. That's the C in MACD. Now I've got divergence. That's the D in MACD. Okay, moving average, convergence, and then divergence. Okay, so now we've got a cross. Now we're watching extremely carefully, fingers on the buy button at this point. There's a flat bottom, okay, but we don't have 2 or 3 of them, or a very expanded flat bottom, okay? We want either 2 or 3 small ones in a row, or one big expanded one, okay? Or that's kind of what we're looking for. Either one of those is okay. Okay, 2 or 3 smaller ones in a row, or one huge big expanded one, or that's kind of, now we know it's coming. Okay, here's one, it's starting to expand. I'm looking for the next one. Here's another one. Okay, boom, I'm buying right now. Okay, that is your signal. Okay, it couldn't be any clearer than that. Stop it again and talk about this. Okay, we had our lead candle coming down, our lead candles, big push down. That's the institutions shaking out the retailers. Okay, next thing we're looking for, MACD cross. We got it. We could see it was starting to cross. We could see the hook. Then we saw the cross. We look up at the candles at that point. Now we're analyzing the candles. You're an analyst first, a trader second, okay? We're analyzing the candles, and we can see wicks everywhere, okay? So we're not interested in that yet, because that's still the accumulation phase, and we're not sure if we're going to continue down or not until we see these big flat bottom green candles, or a series of small ones, like 3, 4 smaller ones in a row, or 1 or 2 really big ones, okay? And then when this broke out, it broke out with a vengeance, okay? Now I'm putting 1 mini on here, okay? 1 mini is all I'm trading right now, okay? 1 mini, okay? I'm not doing partials or anything like that. So I believe in this trade, okay? Why do I believe in this trade? Because we had, the prior day was massive selling, right? Massively sold. The next day, even more selling, okay? But we kind of double bottomed here, because in the pre-market, we were kind of holding this 77 zone. This basically, this 77 to 77 zone, okay, is holding. All right, see that? That is a place that is absolutely holding. Okay, so we're holding above this area of support. Okay, now I've got my entry, okay, based on this first, and this got a long buyer's wick too, and it's a double bottom, right? I don't know if you can, how well you can see this, but these are all things you're looking at. Okay, see these 2 long wicks? Okay, that's definitely a sign that of a lot of accumulation occurred in this area, okay, from institutional interest. All right, big double bottom, big long buyer wicks here. That's institutions soaking up shares down there, okay? So keep that in mind when you see that. That's a very bullish sign, okay? Now that we're in, this is where the money actually gets made, okay? And I'm talking about, not talking about scalp money. I'm talking about big money, okay? We're only trading 1 mini. Keep that in mind, okay? Now, I talk a lot about this blue line. This blue line, this fast blue line here, is a 1 minute 8.5. Okay, this thing is a line that you can ride up quite a ways. Okay, if you just get it in your head that typically speaking, when price is breaking out and price, you're getting a great entry area, you're going to get at least a couple, 2, 3 touches to this blue line and continuation, okay, before the trade is over. So the same thing that happened on the way down here, okay, where you had a couple of touches to this blue line, we showed you those earlier, and then lots of additional selling, like this another 150 points after we doubled up against the blue line. The same thing can happen on the way back up. So if you're patient and you wait for price candles to expand up and over the blue line and then back test it a couple of times, okay, you might get another 100, 150 points after that. So let's speed this up just a little bit in the interest of time, okay, and see what kind of money we can make trading one mini, okay? One mini only, okay? That's all we're talking about. We're not talking about doing a whole big, big crazy lots or anything at all like that. 10 micros, okay? That's what we're talking about right here. So we're in, and we're above all our EMAs right now, or most of them, 3 out of 4, and we're going to have to burst through this one. It's probably not going to be that big of a deal to burst through. That's the anchor. It's pretty low right now because of all the selling that's been happening. Okay, and as you can see, it's not even flinching as it goes through the anchor. Maybe a little bit. Okay, yeah, kind of a few wicks, and then boom. You see how it broke out above it? That was the response to this EMA. So now, where's our blue line? Our blue line is down about 56, about 50 points under. Okay, no big deal. We're oscillating a little bit up here, but we're going to use this blue line as our guide, at least in the short term, okay? And we're gonna take some reactions and responses to it. We're gonna trust that this blue line is going to hold us up, okay? Now, will it always? Probably not, but most of the time, 80% of the time, yes, it will. Yes, it will off an entry like this. So we're gonna when I see this blue line approaching a 77, by the way, to me that's nothing but support in this area. Okay, price didn't even want to go down. Look at that, because there's so much buy interest in a place like this where this line converges with this one, the blue and the 77. So much buy interest. You'd be a fool not to buy it if it came down to it. It won't come down to it. Okay, there's too much buy interest right under this area. Okay, anytime you've got a convergence of a couple of levels, generally speaking, you're going to see buy interest there, and price may not even get down there, okay, because it's such a strong area. Okay, now we can see we've got a nice trend happening. We're already up about 1,700 bucks. That's great, okay, but are we going to sell? No, we're not going to sell. We're going to hang on. We're going to use this blue line right here as our base, okay, and we're going to just keep our stop, kind of trail our stop right under it, okay, right under that blue line. Right, that's what we're doing right now, okay? I'm going to use it as a base, and we're just going to keep our stop under there, okay? As price goes up, we're just going to keep our stop under the blue line. That's the plan of action, okay? So basically you can relax, okay, because you know where your stop is. Your stop is under this blue line, and when price gets down to the blue line, it could bounce off of it 1 time, 2 times, even 3 or 4 times. But as long as it's basically holding on, okay, you don't have anything to worry about at all, okay? If it clearly cannot hold the blue line, yeah, maybe it wants to bounce off the gold line. And if you've got, a couple hundred, points already, then hey, maybe you'll let it break through the blue line and use the gold line. Why not? Right now we're up $2,200, and we're nowhere near the end of this run. Okay, we've got solid price buying above the blue line, right? Above the blue line. So let's just keep going and see what happens here. All right, let's just keep going and see what happens. coming up to a 77. Typically, you'll see some resistance against. Okay. Last time we had 77, it bounced down against it about 50 points or 25 points. But here, it may or may not be wanting to do that. Okay, we kind of did a little jig there and a little breakthrough back test and continuation. Okay, that's good. And we're well above our blue line here. Okay, well above it. So again, we're just hanging out, waiting for that first bounce. Okay, looks like it's coming now. Looks like it might be coming now. We've got some 25-point pullback right here. Blue line's another 20 points down from there. Okay, it looks like it's coming down to it right now. Okay, let's see what happens here. Wicking under a little bit, and then look at the reaction. Okay, I'm not saying that it's going straight up from here, but look at the reaction to the blue line. Okay, really strong reaction. A lot of people are waiting here for this first touch. A lot of traders who missed out on all this, you know, they weren't strategic in their entry. They just saw it going up, and now they're waiting for these bounces off this blue, and they're buying them. Okay, late traders to the game are looking at this going, I like the blue line. I'm going to buy that blue line. You know, a lot of traders are like, I'll buy the second or third touch because that's more confirmed, you know, that the blue line's going to hold. But as you can see, that first touch came all the way in and wicked under. The second touch, people really like that. That's why you see these wicks right here. They really like that second touch, okay? But it might come down a third time, you know? And if it does, generally speaking, third time's a charm. And it won't come back down a fourth time. So let's see what happens here. Okay, this is, yes, a third time. Here's a third touch. And, you know, usually what you'll see is the third touch, if it's going to hold, if the blue line is going to hold, it'll bounce hard off the third touch and not look back. But let's see if that's the case here. I think it is. I think I remember it being that was the case with this. But let's just see, because right now we could still say that it's holding. So we're not moving our stop yet. Okay, at all. Okay. Stop is still a no blue. Okay, and there it goes. Okay, it's breaking out after the third touch. Okay, breaking out here. It's already gone up 50 more points. Just for your information, you're up $3,500 on your one mini, but we're not through selling yet. Okay, now we have to think about some targets. We can look left and see where we had some resistance, and it would be right here. It would be right here. You see, this was the resistance point at the beginning of the day. So we're probably going to run into some trouble down here. Now, I've got a couple of choices to make. Up here at, by the way, up here at 277, right? Oh, that's up here. That's another 50 points up. So when we get another 50 points up, we can either sell it, or we can decide that, okay, we've made a lot of points so far, like 200, more than about 250 points. So if we've made more than 200 points, you can hold the, you know, my rule is use the gold line. You know, don't get greedy. You know, don't get worried about it. If you've made 200 points, which we have at this point, you can use the gold line as your, and you can just take this off and now use the gold line. That's a good rule of thumb. So let's do that. Let's just play the gold line now that we've made 200 points. Okay, 200 points is like it's a really good way to go. All right, so we're just kind of hanging out here under this level, and we're waiting to see what's going to happen. And as you can see, you know, we've only been in the trade for, it's 11:20, and now it's only 11:40. We've been in trade for about 20 minutes. We're up about $3,900, $3,800. and we're just waiting to see if we can get a bounce off the gold line, because we were very successful bouncing off the green line earlier, or the blue line, I should say. It took 3 bounces or so, and then it took off. So now we're going to see if we can hold the gold. Usually you'll hold the blue first, and then the gold, and then you look to get out. Okay? At the next major resistance. And it might be 277, simply because when we look at earlier in the morning, that's where price was holding over and over and over again. It was just 277 up here. So I would love to see either hit 277 and sell, or hit the gold line and then 277. So one way or the other, what I'd like to see is this 277, but I'm willing to risk a gold line pullback in order to get it. We're really hanging out here under this this 226, about 50 points under the target. By the way, if we hit that target, that's probably going to be about $5 grand. Okay, now we're dropping to the gold line. Let's see what happens here. I really want to hit this, and I'm willing to risk a little bit on the downside here. This gold line, which is a 1 minute 20, by the way. If it can't hold the gold line, I'd say get out. I'd say sell. But if it can, let's sell up here at the 277. Okay, it looks like it's holding. It looks like it's bouncing off the gold line. Let's see if it can push through this resistance where it couldn't push through before. Should be interesting to see what happens here. As you can see, this 226 is pretty solid so far. But now that we have support of these gold line traders, maybe there'll be some inspiration to push up through there, up to the real resistance, which is up here at 277. Okay, I'm gonna sell if we get down to this point, right around this 177, or the other place I want to sell is 277. Those are the two places. Okay, look at this. We broke through the gold line support, gave it what it needed, and look, it's pushing up, pushed up to 265 just there. That probably would have been a good place to sell. I'm gonna see if I can actually get, if we can't hold 26, I'll just get out. But I think we're kind of nearing the end of how I want to be trading this. We're up $4 grand right now. If we can get another, I say, back up to the 77 again, then I'm interested. I'm very interested in selling up here. That was a nice little push here. I probably, could have put a sell limit order a little closer. Let's go ahead and do that. Put a take profit up here, up around this level here. If we can get back up here again, just under that 77. It looks like I might want to do it this time. If we can get it, it'll be 68. Let's see if we can get that same level again here, which is about 64. Looks like it's going to do it right now. Boom. Okay. So $4,600 on that trade with one single mini, basically using this, stop this now, using the fact that we had big selling the day before, okay, came down the overnight session, kind of found a bottom, so to speak, a little W pattern here, and then a double bottom here after a bunch of selling here, gave you first green of the day. First green of the day, we measured it, found the 50% level, found out where it was, then we watched for the reaction to it. Price comes down into the pivot zone, and we waited for the MACD to cross, okay, which it did here, showing the internal strength was with us. And then we simply waited for the expansion up to the other side. Okay, once we got the expansion up to the other side, we got in, and then we decided, okay, we're gonna ride the blue. Okay, we're gonna ride the blue as high as we can. We bounced off it 3 times here, but it pretty much held. Okay, then we looked to the left. We'll probably look to the left earlier to figure out where we want to get out. And in doing so, by the way, it did go higher eventually, much higher, but I think this is a nice target for us. We looked to the left, we saw all this resistance here at this 277, right? So I said, okay, if it gets back up to the 277, let's go ahead and let's go ahead and sell up there. And on the way up, we said, okay, we'll take one series of bounces off the blue, and we'll take one series of bounces off the gold. Okay, these will be our support levels, and that's what we're going to do. So that's kind of the entire management of the trade, and the trade was worth about let's see, if we look at replay trading, that one's worth $4,600 off 1 mini. So that's how you make almost $5,000 in about a half an hour, knowing things to do, knowing what to look for, and knowing what kinds of price action is likely to happen, where it's going to hit resistance, where it's going to hit support, you know, and these things play out the same way over and over again. This is nothing new, okay? This happens all the time, okay? But if you kind of know what to look for and you're ready for it, then, you know, in a short period of time, like that was, you know, maybe, I don't know, about 30 minutes, 35, 40 minutes, you got yourself a nice little winner there, you know, about almost 5,000 bucks. Okay, 1 mini, by the way, 1 mini. Your risk on that was probably about, I don't know, let's say you were 50 points on a mini, maybe $1,000 of a risk, you know. And if you're doing prop firm, that's like, you know, 2 tries at a $25, $30 challenge, you know. Really not too much risk there. So I don't know what your specific consistency rules are for the person who's watching this, or if you're trading a cash account, in which case there's no rules, consistency limitations. But I'm just trying to show you what's possible. Okay, you have to do it within the parameters of your own trading platform or your own broker or your own prop firm or whatever. But you know, a lot of them don't want you to make money too much. They want the challenge fees, but they don't want to pay out. You know, so you have to keep all that stuff in mind as you're trading. But I'm with Top Step, and once you're into a funded situation, there's no limitations. There's no consistency rules. There's no limitations at all. You can make as much money as you want to make. You just can't take out more than 5K at a time for the first few payouts, and then it's unlimited after that. After a series of winning days, and I won't get into all the details, but yeah, they don't limit you in terms of how much you can make. So that's good. All right, that's it for now, and I'm going to end the video on that note.